A lot of people are really interested in why exactly is it that crypto is so unstable as far as price goes. And I think that stocks and crypto have many similar elements and many that are dissimilar. You'll see in some of the exchanges in the Caribbean and just off the coast of Europe that exchanges will actually let you now post stable coins or crypto like on their exchange, right? So it's kind of like stocks, or penny stocks, I should say, and crypto are very similar in a number of regards. But I would say it ultimately comes down to a consideration of leverage, right? Because in the world of crypto, if you use BitMEX, if you use Deribit, any of these platforms, you can get 100x on Bitcoin, which is the type of numbers that you get for Forex. And if you look at Forex between the euro and the dollar, or the Great British Pound and the euro or something, unless there's some sort of huge monetary fund decision or something really significant that's going to rock the valuation of the currency pair a significant amount, then you're looking at something that's going to be just a few percent and really stable. So that 100% or that 100x leverage, being able to control $100,000 for, I guess, what would that be, $1,000? Yeah, is not too big of a consideration. I mean, you could get closed out, but if you watch things fairly reasonably, you may be able to not, and you may do well for yourself. With crypto, and you're at 100x, and yeah, things are going 15% or 10% or even 5%. Like, you can get closed out really quickly. And I think what it comes down to there is that, yeah, people see that if it goes up, and a lot of the times, if you've traded options or if you traded using a Forex or really even the futures market in North America and Europe, it'll tick up like 2 and then down 1, up 2, down 1, and then down 2, up 1. So it's hard to really make a profit from a breakout unless you get really lucky. But with crypto, like in the last few days, when you had to go up like $1,000, like it went up like that in no time. So there wasn't like up a little bit, down a little bit. It was like up a lot and then down like none. So that really is conducive to traders' visions, and so they're going to jump heavily into that. Not only that, but a lot of these platforms are super like advantageous to traders in that they have bankruptcy funds. So they have money put aside from fees where, yeah, if there's a huge movement and it closes some people out beyond the scope of, what they have in their margin, then the other people that have the other side and they're making profits, they'll get their profits, but either some of the money will be taken out of the bankruptcy fund to take whatever was short on the side of the person that lost, or they'll just do a haircut across the platform. So it's very advantageous, and it encourages fees and people to jump in to speculate. And on top of that, there are several decentralized finance, DeFi applications that give you a nice loan to value. And some of them, you can kind of put the offer out there. I want a really low LTV on this because I want to maximize my capital. And there's even one that will actually let the counterparty have to wait until they're actually in the red, and then they can activate a margin call. So it's just super beneficial for traders to enter the crypto space. And I think that lends itself to a lot of speculation too, because they look at the risk of being closed out. And I will say that BitShares, which a lot of people will speculate with, especially in the CNY, the Bit CNY, I think it almost hit $1 billion recently in a short period of time of activity, that you put money in there, and I think it's a 1.6 coverage. So what is that? You put up $160 and you get $100 that you could get back or take out or whatever, and still hold that 160 position. So if it goes beyond that threshold, let's say that Bitcoin goes to Zippo, and you got in at 160, and you got that 100. Well, they're not going to liquidate you for 24 hours. I mean, they change the rules from time to time, but I believe as it stands now, the most recent update is that it's still 24 hours. So you get a 24-hour margin call, which you don't really get at a lot of brokers. They will give you a little bit of a margin call, but if things go southward like quickly, they'll either cash you out or try to sue you for the difference. And no one's suing really anyone, I guess, besides Craig Wright in the Bitcoin world. So, I think that leads to the up and down, which is nuts for an asset that's many billions of dollars in value. And when you see the coins like Tether or in USDC and all these other coins, stable coins or ones that are marked 1-to-1 to the fiat US dollar, that their volume is as big as Bitcoin. I mean, like 40 billion in a day. And so that's just showing you that a lot of people are getting in and getting out, and the volatility or the activity of these coins is really high. So I think that when it comes to these types of transactions, that you have to be aware that although I think in many ways it's more speculative, because people that can exercise margin call or have margin leveraging power in equities markets, at least in the U.S. and some parts of Europe, to get portfolio margin, as it's called, regionally, have to have 100,000 in assets, and that's like the bare minimum that I've seen in interactive brokers, and one of the ones 125,000 USD, but a lot of them, Option Monster and a few other ones, like you need $300,000, $400,000. So it's not an insignificant amount of money. And when it comes to Bitcoin, as long as you have a few bucks, you can grab, a few $100s worth of Bitcoin to short, to go long, and you're good to go. If you get closed out, you can make another account, or like a Deribit will actually have sub-accounts. So if you get closed out on one account, within your own profile, you can make out a sub-account that will not be touched by the other accounts being closed out by margin, whatever. So let's say that you completely get closed out of one of them, then the bankruptcy fund will get used to pay the profits on the other side. So actually, I surmise that what people are doing is they'll go long on one and they'll go short on another. And if it's a breakout, then one of them, one side will get closed out, and the other side will make a good sized profit, and then the difference will be paid for by the bankruptcy fund. So, it's really like an arbitrage situation with a lot of these platforms. And if you look at the bankruptcy fund of BitMEX and Deribit even, they're huge. So I think that's one of the reasons why it's getting some real traction. And you're going to see lots and lots more, up and down. But I think we're just starting to recognize that volatility in the Bitcoin space is here to stay.